So why is it that we look at calendar events? Because we can find high probability short-term trading opportunities when markets are surprised. Now, this week, of course, we had the US election, and although there were different views about what instruments would be responding depending on the result, it was quite clear that the dollar would stand to gain in the result of a Trump win. Now, we have to be careful because even when you have consensus trades around elections, the market has a habit of surprising the consensus trade. So we have to be very conscious and cautious of that. But we were expecting a Trump win to be dollar positive. Trump's sort of pro-tariff policies that he was touting as putting into practice as he became, if he became the US president, which he now is, was seen as dollar positive. And that turned out to be the case. We saw a much stronger Republican win than folks were expecting, and the dollar clearly gained. So that's why we're looking at these high probability trading events. Sometimes they're calendar events. In this case, it was an election, and we put it all up here on the cheat sheet so we can be ready. And you can see here that the reaction in the dollar on the decision was very marked, and you can see dollar gaining clearly, and even as markets came into the European morning session, you had short-term opportunities to potentially buy the dollar index in line with this short-term dynamic. So that's why we look at these high probability calendar events, so we can find short-term trading opportunities that have a very high probability of moving in one direction. So without further ado, let's look what we have coming up for this week. So as we look at the coming week, what really matters for week starting Monday, November the 11th? Well, the first event that is catching our attention is the New Zealand inflation expectation print that's coming out on Monday at 2 a.m. UK time. Now, the Reserve Bank of New Zealand, they did take a dovish tilt at their July the 10th meeting, and they backed that dovish meeting up as well in the August 14th meeting. They expected inflation to fall, and they started to temper the restrictiveness of interest rates going forward. The August meeting saw the RBNZ cut rates, and the official cash rate projections were revised lower, and the RBNZ were essentially signalling that the inflation battle is being won. The October the 9th meeting saw the RBNZ cut by 50 basis points, as expected, and then go on to signal further cuts for November. So the bearish New Zealand dollar bias does remain from a monetary policy perspective. A 50 basis point rate cut is fully priced in for this next November meeting. And Governor Orr said on October the 23rd that low and stable inflation is once again in sight. He also said that in New Zealand they see persistence in domestic and service inflation, and the uncertainty continues to influence monetary policy committee thinking. Orr also said on the way down they can be more incremental and circumspect. So if we see a really big inflation beat, that's likely to lift the New Zealand dollar against the Aussie dollar as markets sort of price out that 75 basis point cut that they've started to begin to price in as an outside chance, but it's still there in the stir market projections. And if there's a big inflation miss, that could likely weaken the New Zealand dollar as markets may reconsider the prospects of a 75 basis point cut for the November the 27th meeting. So it's one to look at and likely to look at against the Aussie-New Zealand dollar pair. On November the 13th, we have the US CPI print. Now, inflation does remain in focus. Yes, the inflation battle is largely being won, so in many senses it has less importance, but in the absence of any other major data releases coming up next week, it isn't unreasonable to see a little bit of sensitivity to US CPI data, particularly with the President-elect Donald Trump due to take power shortly, and his policies are seen as more inflationary. So any hint of inflation pressure lingering around may give the dollar a boost, and also the dollar's enjoying a boost at the moment on the prospect of a Republican clean sweep with the presidency, the Senate confirmed, the House still to be confirmed, but looking very likely. So Sensitivity to US CPI print does remain in the case. We'll look at the exact context on the cheat sheet for that day, and we'll look at any potential opportunities that we could see. Definitely worth looking at again this week. UK GDP, it's all a question of how the UK economy is doing in relation to how inflationary the latest budget will be, and whether the Bank of England are going to have an increased sense of urgency about cutting rates. So a big miss in the UK GDP print on Thursday could be a catalyst for pound selling. We've been looking for this on a number of occasions, and at one point we are expecting this sort of capitulation in interest rate markets. But for now, the key focus is a big miss in the data. It's just going to put the pressure on the Bank of England to cut interest rates, and that should be pound negative. So that's definitely something we'll be looking at, and pairing the pound with a stronger currency nearer the time. Do look up on the cheat sheet. These are the 3 events that we see that really matter on the calendar for this week, and watch out for the cheat sheet, and I hope you have a very good trading week.